An analyst just cut SNDL's price target, and it still implies 187% upside from today's $1.22 price. That's how far this cannabis stock has fallen. Meanwhile, the Dow ripped over 1% to 52,747, while the Nasdaq slipped red and energy stocks got crushed nearly 3%. Three big stories, congressional trades, and a $9.1 million insider buy, all in the next few minutes. Let's get into it. Let's start with the scoreboard. The S&P 500 closed at 7,428.16, up 0.2% on the session. The Dow Jones Industrial Average was today's standout, surging 1.029% to close at 52,747.32, a powerful move for a megacap index. The Nasdaq Composite bucked the trend, slipping 0.22% to 24,876.91, dragged down by weakness in growth names. The VIX, Wall Street's fear gauge, fell 2.46% to 18.21, suggesting traders are pricing in less near-term turbulence even as the broader mood stays cautious. On the sector map, communication services led everything, up 0.92% on the day. Consumer cyclical added 0.18%, and basic materials barely moved, up just 0.04%. On the losing side, energy was the disaster story of the session, down nearly 3%, by far the worst performer. Consumer defensive also lagged, down 0.39%. And sentiment? The CNN Fear and Greed Index sits at 38, squarely in fear territory. A market that rallied on the surface today but remains nervous underneath. Story number one is our analyst alert of the day, SNDL. Alliance Global just cut its price target from $5 to $3.50, on paper, a bearish revision. But SNDL trades at just $1.22, so that lowered target still implies 186.9% upside. Even after turning more conservative, this analyst is still calling for the stock to nearly triple. The why here isn't that SNDL suddenly got healthier, it's that the share price has collapsed even faster than the target came down. The target fell 30%, but the stock has fallen so much further that the upside gap actually widened. For investors, the lesson is nuance. Don't just read the direction of a price target revision, check the implied upside math. And when the gap between the street's target and the market's price gets this wide, nearly 187%, it usually means the market doesn't trust the model, not that the stock is a screaming bargain. Story number two is a dilution warning from biotech. ENLV Therapeutics announced a $400 million private placement today, and its stock still cratered 47.4% to $2.24, even though the company reported a net asset value of $66.16 per share and $1.1 billion in treasury holdings just days earlier. Instinct Bio told a similar story, securing $150 million in equity funding for its regenerative medicine platform, and its stock still collapsed 50.4% to $1.36. The why is simple. Raises this large relative to market cap mean heavy dilution, and dilution this severe overwhelms any fresh cash headline. For investors, the takeaway is that a big funding announcement is not automatically bullish. Always compare the raise size to the existing share count before reacting. Today, two biotech names proved a 9-figure capital infusion can still come bundled with a 50% haircut. Story number 3 connects directly to today's Dow strength. Tigris Financial's Ivan Feinseth raised his General Motors target to $130 from $92, 44% upside from GM's $90.30 posting price. Morgan Stanley lifted JetBlue's target to $8 from $6, citing confidence in its 2028 guidance, for 33.3% upside. And Stifel raised Celestica's target to $500 from $445, still nearly 43% upside. The why? This is a coordinated wave of price target hikes across autos, airlines, and industrials, sectors that had been out of favor. That lines up perfectly with the tape, the Dow up over 1% while the Nasdaq lagged, as money rotated out of expensive growth into names the street thinks got left behind. For investors, the message is clear: analysts are actively re-rating old economy, cyclical businesses right now, and today's price action backs that call. Now to Congress and Insider Corner. Senator Alan Armstrong disclosed trades from late March, filed July 21. He sold between $50,001 and $100,000 each of Teledyne Technologies, PNC Financial, and Phillips 66, all on March 27. He also sold Stryker in the $15,001 to $50,000 range, but bought Commonwealth Bank of Australia in that same bracket on March 30, selling 3 U.S. industrial and financial names while adding foreign banking exposure is a notable rotation. On the insider side, Durable Capital Partners, a 10% owner of Goods Head, ticker GSHD, bought $9.1 million in stock across 7 transactions on July 27, real conviction from a major holder. Meanwhile at Raytheon, 2 officers sold. Collins Aerospace President Troy Brunk sold $1.8 million, and Senior VP Kevin De Silva sold $1.5 million today, July 28. 2 insider sales at the same company in 1 week is worth watching. On earnings, there were no major U.S. reports crossing the wires today. But the calendar ahead is loaded with Asian heavyweights. Samsung Electronics reports this Thursday, July 30, with analysts modeling EPS near 11,123 won and revenue near 170.9 trillion won. Samsung's preferred shares report the same day with a lower EPS estimate near 5,577 won on similar revenue. Indonesia's Burrito Pacific also reports Thursday, with EPS estimated at 18.02. And 2 South Korean tickers, 096775 and 096770, both carry identical estimates of 4,413.68 EPS on 27.2 trillion won in revenue. With no domestic surprises today, the real catalyst this week sits overseas. Looking ahead, OPEC's meeting today already rattled energy stocks, and follow-through commentary could keep pressuring crude-sensitive names tomorrow. On the data front, the goods trade balance for June came in at negative $101.5 billion, better than the negative $105.89 billion prior print and roughly in line with estimates. Wholesale inventories rose 0.3%, slightly ahead of the 0.2% estimate. But retail inventories excluding autos fell 0.2% against an expected gain of 0.3%, a meaningful miss suggesting retailers are running leaner stock levels than forecast. And with Reddit chatter dominated by Micron and SanDisk mentions surging, expect chip and memory names to stay in focus. Bottom line, cyclicals rallied, energy got hammered, and Wall Street quietly re-rated old economy names. Subscribe for tomorrow's Data First recap.